Vantage Point with True North Wealth Partners is for our clients and those wanting to learn more about what's really going on within the markets and economy, as well as overall financial planning topics.
Hey everybody, welcome to Vantage Point with True North Wealth Partners. I'm Andy.
Eric Susie.
We got Monday here, October 18th,
yeah.
2021.
Fall is here.
Yeah, last couple of days, right?
Yeah, it's been beautiful.
Yeah, it's been great.
Leaves are turning, sunny. Like that.
High state football,
Yeah.
cool weather. Yeah.
So Andy made it out, folks. Tell me about your golf game.
I did what?
Golf.
Oh,
Yeah, you got out. Remember?
Yeah, went out with some guys. Yeah, it was fun.
How'd you play?
Good. Yeah, we played in a scramble. We were 8 under,
Nice.
but we didn't win, but we had fun.
Yeah, they were stacked.
good time.
I think you said it's 18 under was a winning group.
I think so. Yeah. But it was one of those where you can't get the worst score you can get is a par.
Gotcha.
So they try to keep things moving along. But
that's
it's fun. So hope maybe get out once, hopefully before the snow.
Cool.
One more time.
All right. Well, thanks for joining us here.
Yeah.
Glad girls doing good. We had a good tournament over the weekend. So my one daughter's in volleyball, and Sophia, the youngest, is in soccer. And she's undefeated, so she's off to her bracket there. And Ella, my oldest, is in. They just made tournaments as well for the volleyball. So
Nice. Good.
another busy weekend. It's a blur on Saturdays. Like what? Oh, good. Well, I'll start off with the COVID. You can see that it's gone back down, and so things are still looking good. You're gonna have your hot spots here and there. Russia has their highest right now, so they're having their hot spot right now. What are you seeing on your end there?
Yeah. Well, just this morning, right, we heard that Colin Powell passed away from COVID, which is
Right,
unfortunate. So it's.
And he was fully vaccinated.
Yeah. He was 85. He kind of fits the.
Yeah.
I don't know what you call it.
Multiple other issues.
Older, like the population segment that the virus is, has the worst effect on. But it's still sad to see that. But yeah, just the seasonal flu, right? Like I'm going in to see my doctor and get the flu shot, and
what's the effective rate?
So the average around 40, depending on the year, anywhere from 30-40% on just a regular flu vaccine. So.
Yep.
Yeah, so that's kind of interesting numbers to look at, but crazy.
No, I hear you. And then moving on to the recovery tracker, so you can see things are still opening up, and we're glad to see that. But the interesting fact, too, I was on a call with one of the research partners, the ASA staffing index. So the staffing index is key, and that's been higher than in 2019 and 2020. So that's good. So the staffing, you don't go into a recession when the staffing is going this way. So you'll see that on the chart here. So that's good. And,
So staffing meaning companies looking for needing workers.
Yeah, needing workers. So
Makes
they use
sense.
staffing agencies, temp agencies. Honda does a lot of it as well.
Sure, yeah.
And that's a good sign. It's crazy. I know we talked about the JOLT report, the job openings. There was over 11 million. The last revision was like 10.4 million job openings. So there's still plenty of jobs. Seasonality, or historically, it's a little over 4 million jobs. So on average, so plenty of jobs. It's just the people are getting accustomed to not doing much, unfortunately. But
Yeah. I read something else too. I think it was they said business startups. So compared to this time versus last year, it was up like 400,000.
wow, 400,000.
Yeah, like new
business,
small business startups. And it's like,
Doesn't surprise me that people are, trying
so you wonder, the people who've left are like, you know what, I don't want to work in this industry. I'm just going to start my own gig. And then you wonder too, what's the impact if this vaccine mandate goes through? People are like, I'll go start my. So you wonder how much that's going to increase. So it's just crazy.
No, it is, and
it's a big bump up.
Yeah, people necessarily don't care for big brother and big corporations. So that doesn't surprise me at all. Moving on, I guess, into some other just charts. We have some visuals this time around, a lot more than in the past. But you'll see the volatility index. Again, the average is 18.1. Currently, as of October 15th, came in at 16.3. Again, it's just 30 days looking forward. What the institutional traders think the volatility of the stock market will be. The higher the number, the more volatility. we finally had our pullback of 5% over the past 2 weeks or so. So with that being said, it did spike up to 28, and and then 2 weeks later, within 10 days later, that's 16.3. So interesting there in the volatility. And then as you can see, I mentioned earlier on the pullback, you'll see that we finally hit a 1. So
5%.
Yep. So we had a 5% pullback officially now. It's been registered for the S&P 500. Typically, this occurs 4.6 times per year, and now we had one officially just a few weeks ago, 5% or more. So that's good. You have to get through all that.
Yeah.
There's plenty other action things going on, the interest rates and with the Fed and the meetings and minutes and all that. So with interest rate, the 2-year, 10-year, it spiked back up. Okay, it was earlier on this year, it was real low, 0.52. Then it went to 1.75 in the spring, down back around 1.2, 1.3, and on this chart, October 15th, it hit 1.59. Well, as of today, on Monday, it's about 1.63 or so. So that's the 10-year. And again, the average for that historically has been 2.29, so still well below the average. More importantly is the 2-year. So it's on the hedge I call every morning, 9 o'clock, the part of the research firm that we're on. And with that, the 2-year is a short-term duration. It just spiked. It was 0.2 in that range for a long, long time all year. Now it's 0.41, actually higher than that today. So you can see how it just more than doubled in just a few weeks. Mm-hmm. So what that's indicating for the bonds is, okay, short end move first, then comes a 10-year, and then the longer end yield returns as well. So it'd be a lot harder for the bonds going forward in a rising interest rate environment. So again, for our models, portfolios, that's why we've been massaging, tweaking, utilizing different asset classes, alternative ones, and mergers and acquisitions, just a whole bunch of stuff that we're working on. Mm-hmm. So this, Andy, remember the good old Federal Reserve dot plot? So the Feds, they meet, they talk. Earlier on, last year, a lot of these were pretty much flat, but now they've been increasing rates. So now there's a majority, it's 50-50. Half are now, hey, we're going to raise rates by a quarter basis point next year in 2022. There's talk now they may do even 2 possibly by the end of next year. So at this stage in the game, there's one likely of next year, summer. Let's talk about the tapering. So the bond purchases that the Fed has been doing, $120 trillion, billion, sorry, billion, excuse me, a month. That's going to be tapering. So that should start in November next month. So Fed Powell will meet. More than likely, we'll start reducing the bond purchasing and going down from 120 billion down 115 or whatever it's going to be, 90, 80, 75, 50, yada, yada, yada. So it will decrease over 6, 8, 9 months period. So by next summer, it will be the government will be out of bond buying, which is artificially keeping rates low and propping up the stock market. So a lot of movement to come in the bonds, stock market. Volatility will still be with us, and in both directions, good and bad.
Sure.
And that's the
so it'd be like a 0.25%, you think, each time, maybe?
For the rate increases you're talking about, yes, more than likely, just
gradual.
Gradual. I don't see them going. They've done in the past, 50 or 75 or even a percent in the past, but no, the economy will be slowing. GDP will be slowing. Rates are going higher. Inflation's with us, so it's going to be on thin ice. So they're going to be going very slow.
Sure.
Is our predictions and what we're hearing from our research center as well. Economic GDP growth. So you can see, first quarter is over 6. Second quarter, 6.7% GDP growth. Now this came in from the Atlanta Federal Reserve. Third quarter GDP starting out for the third quarter, and you revise it throughout the quarter. August, September, October. Okay, well, it was 6.3%. They were predicting
heading into the quarter.
Into the quarter. So just their latest revision from the Atlanta Fed, third quarter GDP, as of 10/15 last week, down to 1.2%.
That's a big adjustment.
Big adjustment downwards. So that's what we were talking about, the slowness. Temporary, because we're going to have a nice, we should, historically speaking, have a good year-end rally, meaning November, December, January are typically the 3 best months of the year. So,
sure. But it's the bottleneck, right? Because the consumer pretty much drives GDP.
Right.
right? So you have money,
Yep.
you go to the store, nothing's here. I can't spend my money on things. And
Amen.
so that ultimately affects probably that revision, I would think.
Correct.
It's going to drive it down.
It's all dovetails and snowballs from each other. So speaking of that, you bring up a good point. CPI, Consumer Price Index, which is the inflation. So inflation, that came in actually 5.4%. So from a year ago. So again, remember, for 10 years, inflation was hovering in that 1.75 per year, 1.75% inflation range per year. Sometimes it was lower, 1.5, sometimes a little higher, but let's call it roughly 1.75. The Fed wants to target 2%. Well, we're well above 2%. Yeah. We're going to be in the 5% range this year. Next year, for quarters to come, still in the low fives, high fours for the next few quarters.
Yeah. So how does that affect? So if you're retired and you're pulling money from your investments and you have Social Security, right? So how does that? And Social Security made some adjustments, right?
Correct. Yeah. So it's a good point on that. So
to help offset that.
Yeah. So a couple things. So you mentioned Social Security. We talked about this earlier in previous episodes. So finally, they came in with the COLA, the cost of living adjustment.
COLA.
COLA.
Not this COLA.
COLA, COLA, cost of living adjustment. But it did come in at 5.9%. So 5.9% was a COLA, and that is the highest in 39 years. So in the 80s there. So the highest in 39 years, and with that, it just erodes. So yes, you have wage increases increasing.
Sure.
They're at highs. You have inflation eroding at the wage increase. Then you have a COLA from Social Security coming at 5.9, trying to keep up with it.
Sure.
So it's all just a soup of ingredients. And at the end of the day, folks, you're pretty much underwater. So, when you shake it all out.
Yeah. Well, we don't know if there's going to be a bump in the Medicare Part B premium, right? Yeah. So basically it's like telling someone, hey, I'm going to give you a raise, but also to get to the office, you're going to pay more in gas, and you're going to pay more for clothes, and you're going to pay more for your lunch.
Everything.
So it's like so at the end of the day, it's kind of a wash, I guess, even though it sounds like you're getting a nice little bump.
Yeah, no, it sounds good, but under the hood, it's not. So again, just referring back to one of our research, Hedgeye here, I'm just going to read a few things. So handful of these are year-to-date price increases in goods impacting real people and real businesses. Coal up 215%. Natural gas up 126%. These are all year-to-date numbers. Natural gas. Heating oil up 74%. Coffee up 63%. Butter up 44%. You mentioned palm oil. That's up as well. Cotton up 42%. Wheat up almost 15%.
What's pizza?
Yeah.
That's what I mean, that's the important stuff.
That's the important stuff. You're right. Yeah, you're right. Cheese ingredients, all that. So these are just some things, and it's like I said, not going away. And there was a tweet from this guy Jason Furman, who was a Harvard professor, former chair of Obama's Council Economic. He tweeted here, saying, "Economic problems like inflation and broken supply chains are only issues for the upper class." Whoops! I think he put his foot in his mouth on that one. So it's just interesting how it's all perspective from folks. That's why the DC is a swamp and out of touch. They don't know what's really going on. But so a lot there. I know we packed and covered a lot, but natty gas, that's crazy. Natural or gasoline prices,
$5 in New York City a gallon.
Yep. Yeah. California as well. Yeah. So here it's $3.27 or so I've seen. So it's hurting everybody.
Yeah, I rode my bike to work today.
Did you? The Huffy? Yeah.
That's right.
So there's a lot there.
Yeah, and going back to Social Security, I guess too for a second, because we were talking about this earlier, is that you always think, well, your Social Security is what it is, right? So when you decide on how you're going to take your benefit, you're getting it. But prior to that, there are things you can do just to check, right? So you want to know, you want to think that, okay, the Social Security Administration is going to record everything accurately. But you should, it's probably a good habit to get into every year, 3 years maybe, just to log in to your account, ssa.gov. You can go and create an account and just check it to make sure that they're reporting your earnings, your income correctly. I mean, they have been known obviously to make mistakes, and you know, if you're making 100,000, you don't want to look down when you retire and go, well, they only put in 10,000. You know, that could cause substantial error in your benefit payout.
Yes.
So just something to consider, like, you know, put it on your calendar maybe every year.
Every year, doesn't hurt.
Just make it part of your end of the year routine or beginning of the year routine, just to double check it. So not a bad idea.
No, that's great. Perfectly great call on that one. Yeah. So just again jumping around a little bit more, but the wage growth, we touched on that. So 5.5%. That's the latest from September. You know, historic averages from 1990 to 2010 has been 3.3. So you can see on this chart here how definitely wage growth has spiked up. And again, once you give a higher salary or increase in wage, you know, you see all these hourly workers, you know, 10, 12, 13, okay, 15 an hour, 18 an hour. So they're all around. So, you know, once it's out there, you can't put the genie back in the bottle once you give that price. So, you know, commodities, we talked about how it was up and down. You know, lumber, you know, was sky high, came back down, spiked up, back up with over 40% in just a few weeks. You know, copper's going back up. Corn, oil is up to 83 almost dollars, $83 a barrel.
What's up with Bitcoin?
Oh yeah, Bitcoin.
Speaking of commodities.
Speaking of commodities, yeah. So Bitcoin, I think, then today almost hit $62,000. So, and the reason being, I believe, and you and I talked about this last week too, we were hearing rattles so in the news. So ProShares is a conglomerate ETF share. They're putting out what's called a managed futures ETF product tomorrow.
Yeah.
Tuesday they're launching it. So there's supposedly 4 funds that are being released, 2 this week, 2 next week. It's the managed futures contract. So it's just, you're not going to underline own the Bitcoin, you know, the crypto stuff, but it's just the future. So it's a step in the right direction to getting it legalized and harnessed, you know what I'm saying, through SEC rulings and guidance.
Sure.
But yeah, so, you know, last time it was over 60,000 was in the springtime of this year. So now we're approaching 62. So, you know, Andy and I are keeping an eye on it. You know, we'll see. It's still the wild, wild west, so it can go back down to 50 in a heartbeat or lower. Remember, up to 40,000 from 60 to 40, so it can easily hit that again.
Yeah. We've been looking at it quite a bit. So I think, you know, you just don't know, right, what's going to happen, but it's good. It's good to know what's going on, obviously, and you know, clients expect us to. Yeah, and so I think too. I mean, I've had some really good. Like last week, I had a couple of really good conversations with some firms that could potentially offer Bitcoin to our clients. You know, either inside the portfolio or outside the portfolio. So these are things that we are investigating, researching. We have to obviously get our compliance team, you know, on board, make sure all the I's are dotted and T's are crossed, but who knows?
Like we said earlier, we're the turtle versus the hare, so we're not going to be the first of these new type products. Let things shake out, but but
at the same time, like if you, and you're right on that. You always want to be cautious, but like if there's a client or someone says, hey, look, I got 10 grand that I want to throw at it. That if I lose it, it goes to zero. No big deal. You know, and it's just nice to be able to say we can do that, as opposed to, well, you got to go to Coinbase, you got to go to Robinhood and set up an account that really isn't tied directly to Bitcoin. Be able to offer clients that's safe and the way it should be done.
The way it should be done, in an environment that's monitored, controlled, and looked at.
So more to come on that.
That's great. So. Good. Well, let's see here. I mean, we covered a lot. We have a few tips of the month, things of that nature. Anything else on your end?
Yeah, no, just nothing. You know, annuities and 401ks now potentially. But that's you know, that could be something that we'll have to address with clients who have that option potentially. So
things always evolve and change. It seems like so. Fast paced these markets are. So we will continue to monitor, tweak things, and do all that good stuff. But so a couple of tips of the month. I know, you know, your kids and my daughters, but we have the Ohio 529. October is a busy month just because you have the FAFSA, which is a free application for student aid, the FAFSA. So with that, it started October 1st. So anybody who has high school students,
anybody,
and reoccurring, you want to file every year. So it's pretty much first come, first serve. It's a pot of money that sits there from the government. October 1st, here it is. Here's your pot. Then they start taking applications and it just dwindles down. So definitely file if you have not yet filed the application.
Yeah.
Also, there's an app that's coming out on the Ohio 529. So that's going to be nice when that gets released here. And they said in the third, or now in the fourth quarter, so it could be another month or two. But just be for those our clients who have the Ohio 529, there's an app so you can make contributions, distributions, all that good stuff via an app instead of having to log in online. So just FYI. Also, the $4,000 deduction per person per year, per student, child per year for the state of Ohio against a top line deduction. So any Ohio resident, so grandkids, or grandparents, parents, what have you, who want to contribute to an Ohio 529, you can do so and be eligible to take that deduction, whatever you contribute, off the state of Ohio deduction by visiting it's ugift529.com. So ugift529.com.
Yep.
So make a,
Yeah, and Ohio has a pretty good 529 plan.
Top 5.
Yeah, so but keep in mind too, you don't have to contribute to the 529. If I wanted to I wanted to go to California's plan, I could do that.
Yes, you can.
Yeah, and my kids can go. You can go anywhere with any state.
Any state, yeah. And
So
to that point,
misconception.
And if you open Ohio 529, which is great, you can use it for any, apprentice, 2-year degree.
Or if your kids go to California college,
you
can use it to pay for that.
Yeah, it doesn't have to be Ohio, in Ohio colleges. It's any accredited college. And the other thing people ask, well, Eric, doesn't it hurt? The FAFSA, the funding formula? No, it's only 5.64%. So 5.64% of the account balance in the Ohio 529 account is applied or assessed against the student. So that's if the parent owns the account, the beneficiary is a student, therefore only 5.64% of that account balance is used against the formula that they use for the calculation of that. So it's minimal. So, I've been using it even before we had kids, that story. So it's a great vehicle to use and keep on doing that. Talked about the COLAs. That's key. I know with the Medicare, open enrollment.
Open enrollment, right now.
Boom. So folks, a lot of our folks use Mike Gatteri, our specialist as well. So with that, please reach out to him. It's that time of the season if you already haven't. If you need assistance, please reach out to Andy or I. Russ, whomever, just we'll get you in contact to Mike. So this is the time to October 15th through December 7th. So open enrollment is here. So make those changes, tweaks, look at your prescription that you're using, how things have changed. So you should always look at it once a year. It doesn't cost you anything to have a specialist look at it like Mike.
Sure.
So you might as well let the pro do it.
Yep.
Let's see, any other tips of the month covered all that? I guess maybe just finally Happy Halloween's coming around. We have, November 2nd is voting. That's coming around. So got to stem the tide there, folks. You can do that. Just want to put a little plug. So this is a neighbor of mine, Diane Rigby. So Diana, she is running for the Dublin School, and also Sherry Stricker as well. So with that, it doesn't hurt to, within each school district that you live in, just find out who are the appropriate folks and
makes sense. It's good.
And just get out there and vote. So I'll just put this up briefly. There you go. There's Sherry and Diane. So they're the two that are running. There's a lot of seats that are open up in the Dublin district. I'm sure there are some in yours and even our Hilliard as well. But that and in Virginia, that's going to be a big one. The governor's race there. So follow that. And, so get out there, do the right thing.
A lot of stuff going on, yeah.
Yeah,
good.
So happy Halloween, everybody. Andy,
yeah.
You too.
Yep, enjoy.
All right, you guys. We'll see you next time. Stay well, enjoy fall.
Yep, see ya.
Thanks.
You can reach this episode on our website at mytruenorthwp.com, by other podcast venue sites, or by calling us at 614-929-2715. Also, feel free to share this episode with friends and family and sign up for our weekly email market updates via our website. Special thanks to our producer Nathan, as we will be producing these episodes on a monthly basis. Investment advice offered through Stratus Wealth Advisors, LLC, a registered investment advisor, DBA True North Wealth Partners. Investing involves substantial risk. True North Wealth Partners and Stratus Wealth do not make any guarantee or other promise as to any results that may be obtained from this. The opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. The economic forecasts set forth in this material may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. No reader should make any investment decision without first consulting his or her own personal financial advisor and conducting his or her own research and due diligence.